What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 13th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we have not only got to talk about the continued weakness in both Bitcoin and altcoin prices, but outside of that as well, I want to spend some time today to explain in clear terms. I think many people haven't done this yet, but really talk about why in the current environment we are likely to head lower and have a healthy, much needed correction in the broader cryptocurrency market. We've got a lot to unpack here in today's video. If you guys happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. Now, I want to keep things incredibly simple here, guys, and focus on the reality of things. You don't need me to tell you this, but price action is not really looking good right now. If we take a look at Bitcoin, all the other metrics we have are the indices for the broader altcoin market, you will see a similar trend. Bitcoin is holding up better than anyone in the market right now. If we just take a look, though, it is not looking very optimistic. We have been, again, spending much more time with the 100-day moving average than we are with the 21-day over the last few weeks. We can see that we faced resistance yet again at the 21-day. We were not able to get a solid close above there. We faded yet again, and not only has it been acting as resistance back here on May 10th, but now for the last really 3 trading days, we have been in the 100-day pocket here rather than facing against the 21-day. This showcases that sell-side pressure, the bears essentially, are leading right now. They are leading prices lower. And if we can't hold in this 100-day pocket, if we snap, it is likely that we're not just going to deviate below the 100-day, meaning that we'll likely revisit 57K, but also come down here towards the 200-day moving average, as we've been talking about for the past couple of weeks, as continued weakness has presented itself. Now, this is just Bitcoin that we're talking about, right? If Bitcoin has got this chance to go to 200-day and really even go down to our target, which is a 33% correction, somewhere below the 200-day moving average. This is also the resistance or sell-off point from the ETF launch. It's also slightly below the range of support here, 50K. I'm expecting that there's going to be a big flush down. A lot of people who are leveraged on leveraged positions during this run-up here are going to get knocked out, and it's going to cause a consolidated effect in the market. But beyond that, we can also know, as we've observed throughout history, most of you already probably know this, that when Bitcoin goes up, altcoins usually tend to outpace. And vice versa, when we go down, altcoins usually get hit even harder. So it's a very important dynamic to understand when we're trying to determine when we could find a bottom or a minimum where there might be a good value range to build entries. It doesn't matter if you're taking a look at total, which measures the entire market cap of crypto. We are down below the 100-day moving average. We've been holding by a thread here at the same range we tested back here on April 13th. And as we can see here, if we just kind of look at the fact that we've had lower lows each time, I would assume you've got a third one coming down here at a minimum to $1.9 trillion, which would be another $2.5 trillion white bottom market cap. Total 2, right? Excluding Bitcoin. This is giving us the actual kind of altcoin market. This does include Ethereum still, which some people may not want to factor in. Either way, though, clearly below the 100-day, clearly below the 21-day, inability to actually trend higher. 200-day is screaming for a retest here at a minimum, and we're probably going even lower than that here on the chart. Next thing here, total 3, right? Same exact story here. I don't want to, spend too much time here looking at each individual index. I think they're all telling a pretty similar story. Others is probably the clearest one here, with a 3.2% downward move today, one of the worst across the indices. And this looks not only bound to test the 200-day, which we've already been doing multiple times, but really the 200-week pocket somewhere in this range, as we've called for a continued 32% correction from where we were back here in mid-May. I think that overall you're going to get a 50% correction. I want to highlight that number here, guys, the psychological level of 50%. And we are well overdue after a 373% price expansion from back here in June of 2023. We are well overdue for something like that to happen. And I don't think that that's a crazy ask here, and will give us a great opportunity to buy some phenomenal altcoins at a discount. I want to go ahead and explain here really the 2 factors here that we need to keep in mind. First off, we need to talk a little bit about just the current state of the market. Let's take a deep breath of fresh air. Let's come to our senses and ask a really fundamental question. I don't care at the end of the day if you're just here to speculate, if you really love crypto as a technology, if you're a trader or investor, doesn't matter. I want you guys to think about one really simple question as we go into the next major topic, which is, I think, really going to clarify where we are right now in crypto markets. Take a look back here at Ethereum's price in 2021 and 2022. You guys remember back then how euphoric things were? Dogecoin rallying to almost close to $100 billion. Shiba Inu taking off like wildfire. Meme coins, top performers, risk taking at extensive levels we've never seen before. GameStop stock was going to the moon. I mean, it was just ridiculous. There was so much money in the system post the pandemic. People were speculating on financial markets. Peloton, Zoom, and ARK, the ARK ETF, all these things that were kind of seen on the tail end of risk were really the leading players because there was just so much liquidity and excess euphoria at that time. Now, Ethereum is at a similar price range here. And I want to ask you guys, even with the recent decline or the relative highs here back in March, I want you to really think for a moment and ask a fundamental question. Do we have anywhere near the liquidity injection or growth into the crypto space, like new capital, new participants coming into space, as we had back then? And also, do we have anywhere near the kind of forward outlook optimism for crypto as we did back then? Just take a second. I want to pause and give you guys some time to really think about that. Because for me personally, it's a screaming no. And I don't think that that is me being pessimistic. That's not me being a perma bear. That's me just kind of like applying my street smarts and being like, yeah, I don't see anywhere near the kind of social traffic. I'm not seeing anywhere near the liquidity injections, even considering the ETFs. We had much more inflows, I think, overall from stable coins back the last time around. And we had much more new participants coming in, and that liquidity was rotating much more freely in the crypto space. It wasn't dependent on Bitcoin moving up entirely. We had a ton of dollar liquidity going straight to the altcoin space due to stablecoin injections from USDT and USDC. Right. So my main point here is that I'm not surprised why ETH is fading like this, and I wouldn't be surprised if it continues moving lower. Right? And even from a fundamentals perspective at Ethereum, like whether you like Ethereum or not, guys, the only thing people are buying ETH for right now is, oh, well, the institutions are going to buy our backs because there's going to be an ETH ETF. Well, I wouldn't be so certain about that. And I wouldn't be so certain that that alone is going to carry Ethereum forward. And that's the kind of narrative that allows you to reach maybe back up here towards the prior high range, but not really go on to set new highs. And I think a lot of people have that kind of empty hope here whereby Ethereum doesn't have to do anything. It can continue to stall on a fundamental adoption basis, on its tech basis, and continue to lag against its competitors. And that's just somehow okay. But I don't think that that's a reasonable way to go about this. But I'm going to talk about a bigger problem here, guys. This is really what I want this video to be about. I want to talk to you about because it is, at the end of the day, it's the reality of what we're living in right now. There's not much room for a subjective opinion. This is what will determine whether or not market prices are going to move higher or down, because crypto itself as a market is very cyclical and they move in tandem, right? So if Bitcoin is generally moving up, whether altcoins are outperforming, underperforming during the day, they're going to generally move up, and vice versa. If Bitcoin's getting hit hard, altcoins are going to get hard. The crypto market as a whole moves together very much in tandem. And it has to do, generally speaking, with a clear formula or principle, which is that the amount of currency supply or currency inflows into the market, new money coming in, new entrants coming into the market, it is one of the biggest determining factors of whether or not we are going to be moving upwards or downwards in the market. Now, of course, we're talking, generally speaking, over the long term. Inflows are generally always coming into crypto over the grand scheme of things over the long term. But in the near term, there is some general figure here, and that is ETF inflows for the day or the week. It is spot buying, it's stablecoin inflows, right? And we don't have a way to really track that metric, right? To be completely fair, we don't have a genuine, bona fide way to know what that figure is. But we can generally assume, using the second metric here, that is going to help establish market price and market price direction to the upside or the downside. We can utilize the second metric, which is the token supply. Now, what is the token supply? The token supply, in my view, in this kind of formula here, is the amount of existing cryptos on the market trading at some valuation in the market, i.e. market capitalization. That's probably the best way to view it here, right? So we have this general kind of dynamic here between demand and supply. If If you want to view it that way, that's probably the best thing here, is that we've got amount of dollar liquidity wants to be allocated somewhere, and you've got a certain amount of token supply. Now, when these are in a general equilibrium, you get a neutral market price, right? Market prices stay generally where they are. There is enough liquidity to satisfy the amount of tokens out there in the market, the amount of market valuation, whatever is required. Again, this is guessing work here, but again, I want to get more towards the visual, and we'll look at some of the numbers here in a bit to try to determine where we might be. But generally speaking, the reason market price is going to stay where it's at is because there's enough dollar liquidity to satisfy any sell side pressure from this token supply, from insiders, from long-term holders, from traders, from team members, from treasuries, whatever it might be in the crypto space, who hold these different tokens. Now, I want to go ahead and showcase what can happen here when there's an imbalance, when there is much more dollars entering the system. And I think this is the case back a couple months ago versus the available token supply. You get significant upward pressure in market prices. That is what we saw here throughout the period of time from October 2023 here to back in early mid-March, where we went up from around $1 trillion up to nearly $2.7 trillion, adding $1.7 trillion in market valuation across the board. Doesn't mean $1.7 trillion in new liquidity ran into the market, but what we're talking about here is a general increase in market capitalization or value in the market. That's what can happen here when you have this imbalance between the amount of demand or liquidity injections in the market versus the available token supply. But here's what usually happens here. You usually tend to find that there is nice, solid amounts of demand, and it continues to keep up here because people are seeing in the news, they're seeing headlines, whoa, money's coming to the market, prices are going up, people are making, $1 million plus on meme coin trades, buying into random meme coins. Wow, this is really cool. And people continue to keep that demand up. It doesn't really fade away immediately. But then you start seeing a lot of people on the other side who are thinking, hey, I could launch a meme coin. I should be able to launch a DeFi protocol. I've worked at Facebook, Amazon, Microsoft. I have this really cool idea. Maybe I've even been working on that idea for some time, but now it's finally coming to the forefront, and people seem to think my idea is much more valuable than it was a couple months ago because of the optimism. I'm going to go ahead and launch my own token. Me and a couple guys, we're going to launch a token here. And this is what increases the token supply in the market. This is what happened, in my opinion, here during the period of March to April. You start getting to a period of time where there are a lot of new projects. Capital flows are still strong, but you got a whole new range of meme coins coming out. You got a whole range of new L2s coming out that are trying to compete with one another. You get a whole range of infrastructure protocols, DePIN or AI-related plays come to the market. Not so much question of fundamentals or whether or not one player is better than the other. It's a rising tide lifts all boat scenario. We're all feeling good. We're all kind of owning our little stake in the market, and we think that everything's just going to go up, and we're in la-la land, and it's a great time to be in crypto. This dynamic, though, creates a neutral price, right? So a no-trend scenario here for market price direction, meaning that we start to go sideways. We start to trend at the 21-day or chop around there rather than trending higher. And then you get a scenario here where, because the price action isn't showing up to the plate, demand starts to go down, and you are left with all of this token supply, which leads prices inevitably down. What comes up must come down to some degree, right? And the reason why we see this is very, very simple. Market prices have stopped performing. It is very clear if you've been listening to price here for the past month or two, as we've been signaling here really since back in early April, the warning signs. Market price is not performing, and that cuts out a lot of the headlines, it cuts out a lot of the euphoria. It is an inevitable cycle where people got over leveraged, overexposed, over optimistic, and too much value was created out of thin air. So what's going to inevitably happen? Well, with market prices going down, while there is obviously the same amount of token supply at the end of the day, you can view this kind of in a different way here. This is essentially going to be the value of the overall market cap, right? So again, that's going to come back down to reality here, be back more in equilibrium with dollars. And that's when you start to, for example, see eventually that we could get to a point where maybe down here at the 200-day or somewhere down below here at the prior resistance range in the past, that maybe buyers start to come in, that demand, that inflow of new capital, the DCAers or dollar cost averagers, the institutional capital, smart money buying the dip, they start to keep prices more neutral, And then we can start to have that imbalance again, whereby dollar liquidity is outpacing token supply, right? So again, keep this in mind, keep this formula in mind, guys, and understand that this is what's going on in the market. And if you don't believe me and like that this is a problem, take a look at the overall entrance of major categories in the crypto space, some of the big narratives here, right? Great example, meme coins. Meme coins, as we emphasized in the prior video, are trading near $50 billion. A few key cryptocurrencies here: Dogecoin, Shiba Inu, Pepe, Dog with Hat, Floki, Bonk. Feels so silly saying all these things, but like these few entrants hold tens of billions of dollars of market cap. There is no fundamental value behind them. They are purely speculative plays, and I think people who are holding them long term will tell you that. They're hoping that people are going to buy these at higher prices. The charts are looking good, etc. Right? That's the narrative. So tens of billions of dollars within these meme coins. That's one corner of the crypto space. You've also got gaming tokens. I can't tell you guys. I know a lot of really interesting MVPs. I see some games that are looking definitely more professional than the last cycle. I'll give it that. But I don't see enough opportunity here, and I don't see enough established games that I would want to play as a gamer that justify anywhere near a $22 billion valuation for, even if we're talking about the infrastructure for Web3 gaming, the games themselves. I'm going to be honest with you guys here. I'm going to be cruel. I'm going to be genuinely truthful with you here. I do not see anywhere near the justification of valuation for these. I still don't see a world where Sandbox is worth 900 million, Axie Infinity is under $1 billion, Decentraland 750 million. Sorry, I don't see it. I'm not trying to insult these projects. I think they built some interesting tech. They're pioneers in their own right. But at the same time, nothing to justify a net valuation here. This is circulating market cap, mind you. Not even fully diluted value, which again, we're going to get to talking about here. That's the next topic we're going to talk about after we talk about AI big data coins. AI and DeepN, big data, right? DeepN is more probably the official term for it. $35.4 billion. Now, if I'm going to be fair here in saying if we remove probably some overinflated protocols like Near Protocol, and really look for plays like Render, BitTensor, plays that are really in the kind of AI space, this isn't as bad as I think where it could be going over the broader term of the cycle. I'd say this is more like $25 billion, and I can see it going higher because this is a hot narrative. But still, $25 billion, $35 billion, pick your measurement. Both of those right now in the short term are probably way overextended. There's not the liquidity to sustain those valuations, the potential sell side pressure. And this leads me to talking about the mass dilution. Visualizing what we talked about earlier, how when markets move up, a lot of new projects get listed on the market at ridiculous valuations, and there is inevitably going to be sell side pressure on these. Now, of course, there can be buyers, and maybe that demand for a while outpaces the sell side pressure, but eventually, when you start seeing prices move lower, that is a clear manifestation that there is more sell side pressure on the market, order side than buy side. We can see here Jupiter. Jupiter's cool DEX in the Solana ecosystem. Overall, probably one of the best out there, much better than Radium and a lot of other plays. Fully diluted valuation, $10 billion, even after a correction from $1.80 down here to $1. Right? It's circulating market cap, went from 2.4 billion here to 1.4. And you know what? Even though that's a $1 billion pullback, I think it's still got a ways to go. I mean, guys, $1.4 billion for Solana DEX. Again, I want to take a step back here. It doesn't even matter whether or not you think that is like a cheap valuation or not. Do you think we have the inflows to satisfy that right now? Do you think we have the inflows to satisfy Jito? Another, again, play that came out to the market here, I think was one of the big airdrop plays, might be mistaken, but again, Solana play, $3.8 billion fully diluted. Even if we're just taking a look at the market cap here, let's think in the short term, do we have enough to satisfy the demand of Jito at these valuations? I don't think so. And I sure as hell don't know where we're going to get the money to supply and value the $3.8 billion valuation over the next couple of years in this play. And I understand some people say, oh, it doesn't matter, Nick. It doesn't matter because a lot of these plays, they're fully diluted valuations. Athena, in this case, $1.2 billion for its circulating, nearly $12 billion for its fully diluted. A lot of people will say, Nick, it doesn't matter. Don't trade off the fully diluted valuation because for the next couple months or the next year, the team tokens are locked, investors tokens are locked. It's free reign, right? It's okay. we can just trade these. And I have to tell you guys, I'm gonna let you guys know a little secret here. Unless there is some way that the team has provided full transparency around token vesting, that it is programmed in their smart contracts, that they have shown you every bit of evidence and proof that their token metrics are going to work the way they claim, I will tell you from the time and time again examples that we've seen in this space, I think we saw it in a whole range of Solana plays that are created, mind you, by very similar insiders and similar VCs. They lie to you. In crypto, you are in the wild, wild west. You are in a world where people not only feel that they have the ability to go launch a token at ridiculous valuations, but unload it on the market unsuspectingly and just claim, oh, it's the airdrop farmers that are unloading it. When in reality, they're selling as much as they possibly can without affecting the chart too much, right? They're looking to make immediate money as soon as possible, guys. None of these people, so many of these people in crypto are not in it for the long run. I hate to say it. I know there's some people who are really building with great intentions, but if you're jumping out of the market with a fully diluted valuation like StarkNet, $11.5 billion fully diluted, 840 million, and your chart looks like this does not send me the signals that you're a serious team and that you have serious long-term intentions. It looks like you're farming and getting as much of everyday retail and institutional liquidity you can get off of suckers who are willing to buy your project. And I'm going to say that pretty bluntly here because I hate seeing people get chopped up. I hate seeing people, pour their hearts and souls into a project they may even fundamentally like, and they just get burned. And there's too many people out there telling you that this is just guaranteed to go up. And I'm going to sit here today and tell you guys it's not always guaranteed to move up, and it's because of this simple formula here. I'm not here to badger any particular project, but I named a couple here today, and they are just a few of the culprits in this market who are doing the exact same thing here. Creating a lot of frothy valuation that is not justified by any means, and that is going to lead market prices lower and lower and lower until you get to some degree of equilibrium here across these plays. That's why for me, as you guys will probably notice here on this channel, I always talk about buying into discounts. I talk about trying to get these things at lower valuations, and outside of this, well, focusing on small and mid caps that aren't launching at crazy fully diluted valuations. Not these big kind of insider plays here that have short-term run-ups and that are just big distribution games for the next 2 or 3 years as the token slowly unlocks over time and gives insiders a way to just unload and unsuspecting buyers who don't know about the token metrics, who don't really know how bad it is, who don't really know about that demand supply equilibrium that needs to be met to justify current market prices. That's why I really recommend you guys look into a whole range of new emerging narratives in the market. I recommend you look into plays that are not trading at such crazy fully diluted valuations and actually have strong price action behind them. And one of those projects that I'm keeping on my radar is none other than Checked. Checked is today's sponsor for our video, but they're tapping into a really exciting narrative that I think is on the up and up over the next couple of months and the next year. And that's the narrative of self-sovereign identity, or SSI. Now, before we even talk about Checked as a project, it's important and vital to understand not only why I believe that SSI as a concept is a vital integrative step within the broader adoption of Web3, but outside of that as well, how it is multifaceted in nature. It services a whole range of Web3 use cases rather than just one use case. I'll give you an example here. Take DeFi, something that I'm really passionate about, or decentralized finance. If we're being completely honest with ourselves, as we've been kind of talking about throughout today's video, as we look back over the past couple of years, the key narrative of DeFi and all the core applications have really not grown that much, if we're being honest, in actual real adoption. Take Aave and Compound, which are two of the biggest lending and borrowing protocols. They function as intended, they're great protocols, but the problem is that the only existing use case for borrowers is to lock up at least $100 worth of Ethereum or relevant cryptocurrencies in order to borrow, say, $50 of stable coins. And that's great if you want to leverage trade or just have a short-term loan and you have a lot of digital assets sitting around. But this cuts out about 95 to 98% of participants and borrowers out there, and borrowing use cases for that matter, that are already present in the TradFi world that we want to bring into a permissionless DeFi world. Well, in order to do this, we are going to have some degree of self-sovereign identity. This could allow us to essentially change the game, expand DeFi and many other use cases to an extent we have yet to see. In the case of lending and borrowing, for example, I may be able to to borrow, for example, $50 worth of stablecoins and not have to lock up 2 times that amount in crypto collateral. I might be able to just put up a little bit of crypto and share some data, or essentially verify that I've gone through some checks and balances through a third-party validator. All of these different things will allow for so much more applications to function in a permissionless way. And that's exactly what Checked is aiming to do. They're aiming to bring self-sovereign identity to a whole range of narratives like gaming, as well as regulatory compliant DeFi, which will allow for a whole range of TradFi applications and real-world DeFi use cases into the Web3 space. That to me is much more exciting than providing liquidity to leverage trade and do other things. Not to mention bringing other industries that people haven't been talking about so much, like healthcare, as well as actually having entire Web3, citizenship systems and governments, as that has become a bigger and growing topic over the past few years. Above all, guys, I really see here that even in topics like DeFi or GameFi, that there is a vital use case for self-sovereign identity and for the emerging set of use cases that we have yet to really even see in Web3. I think self-sovereign identity is going to touch the space in a way we have yet to see, and it is going to bring about a lot of value creation for a whole range of applications that are trying to reach that next leg up, that next wave of users that we really, I don't think, have seen this time around in this bull market. So there's a lot of partners and investors. They obviously have their SSI vendors who help to actually validate identity and help to actually make a huge use case range of applications in crypto actually feasible by having that identity component. There's also validators on the network and a whole range of investors, some well-known ones that I've seen like Skyvision Capital and a whole range of others like Outlier Ventures. But the big thing above all is to understand that they're already landing big partnerships. They've been working with AI-based projects to verify trusted data and make sure that the applications that utilize AI or large language models have actual source data to utilize. But if you guys are interested to keep up with the project overall, it's one of a few on my radar here for this topic of SSIs. I definitely recommend you guys check them out on Twitter. Feel free to give them a follow. Join their Telegram or Discord, which you can find on their website. And outside of that as well, feel free to check out the tokenomics page and the learning section to learn how the Check token, the core utility token, plays a vital role within the Check ecosystem. For me personally, I think overall any projects that are tapping into this market are going to be one that you want to watch. And Checked has been an established play for a while. It's not an entirely new project, so it's starting to build its foundation and provide a fundamental use case in the crypto space of being that core layer of identification. And I think it's got a really interesting approach in doing so. So check it out, the link down below in the description, and feel free to let me know if you guys want to see me cover more of it on the channel. But I want to go ahead, in closing here, guys, take us here towards the macro charts. I want to take a look at the NASDAQ here. NASDAQ has rebounded solidly off of its 100-day moving average. It is currently above that 21-day. But for the past week, we saw a chop after we gapped up here on Friday on the previous weekly close, not making much gains here and getting right back up in that range where we saw distribution or sell side pressure before and a break on the 21-day. So I want you guys to keep this in mind here, right? I think this is going to be a great gauge, seeing whether or not the NASDAQ can really clear through 16,500 points. I think is going to be really your gauge to determine whether or not we're really back at it, that the trend's going to continue higher. And that would give me the confidence signals that maybe Bitcoin doesn't break below the 100-day moving average and maybe kind of picks up here. We've seen a little bit of buyers coming in here over the past hour or so. We're going to have to see how that plays out here. But again, above all, guys, as we've been talking about, this is the Bitcoin storm here. It is a period of volatility where the 21-day and the 100-day are coiling price together. And while I do believe that trend direction is likely moving lower, the big point I've brought up here in this channel, above all, guys, is waiting for a clear trend move. Waiting, not just trying to trade the chop. Trading chop is where you're going to get eaten up. It's above all important to wait for clear confirmation. Wait for a clear daily close above 65,000 that really solidifies that we're back in action, or something that is a clear daily close below the 100-day moving average that can let us know that we're probably heading for more blood in the streets, more pain, more of a flush down in valuations before we're going to find that bottom. Those are the key things we need to keep in mind, guys. But we already talked about a lot today in regards to the microsphere. We're also going to be keeping an eye on the macrosphere. So far, everything is looking fine financial markets still setting up for something big going into the summer. But for now, everything is playing out fine, and we're looking to buy on sound dips and be able to make some great entry opportunities. Or if we see that sign of confidence come back in, we get a nice close above the 21-day, we get back in, we ride the wave, and we pick up some great altcoins at a discount. So that's it for today's video, everyone. Thank you all so much for watching. If you guys enjoyed this video, consider dropping a like. It's a great way to support the channel. And I'll see you guys right back here on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone.